We can go ahead and get rolling here. So good morning, everyone. Thanks so much for jumping on today for this week's Coffee with Chris. Just so everyone knows, we're here at 10 a.m. every Thursday morning talking for about 15, maybe 20 minutes tops about something new or something happening in the market, some new program like today. And we do want you to know if you ever have like questions or a topic you hear about or wondering about, we're always looking for things to talk about. So send them on our way and we'd be very happy to address them one week. But Chris, thanks so much for being here and sharing your knowledge with us this morning. Chris has 20, almost 25, this summer is 25 years, right? In the mortgage industry.
25 years, not bad for being 25.
25 years. And then his wife and business partner is just right behind him with 24 years in the industry. So a combined 49, almost 49 years together in the industry. So we have a lot to learn from you. You've seen the ups and the downs. You've been there through the housing crisis of 2007, 2008. You saw it in 2011, 2013, and then now you're seeing this as well. So thanks so much for taking the time.
Well, thank you, Mindy. This is my favorite part of what I do. So being able to educate and help people understand some of the nuances in our world to help them have a more easier process, especially realtors. So thanks for joining us, guys.
So let's jump right in. So we have a brand new topic that was literally just announced 2 days ago. It's Florida specific for our Florida residents. So Chris, give us a preview of what was announced.
Well, so Governor DeSantis literally just announced yesterday that he is going to be rolling out a program that's going to be helping heroes. So, when we think of heroes, what I think of heroes are the people right now here that are law enforcement, our teachers, our doctors, childcare professionals, active and veterans for the military. I just want to make a point of that you can also be active. But he put out there that we're going to have this program that's going to be called the Florida Hometown Heroes Housing Program. And what it's going to do is it's going to offer a down payment assistance, for frontline community workers, so they can have a better opportunity to obtain a mortgage. So what they did was when the General Assembly got together, they appropriated $100 million towards the program. And that will be administered by the Florida Department of Housing, and that begins on June 1st. So I think the important thing and why it is important for us to talk about this today is because once that gets rolled out, $100 million is a lot of money. However, $100 million can go quick too. So once it's gone, the program, they could extend it, but I don't want to bet on something that could be an awesome, fantastic opportunity for some of these people that would qualify for this program. So it's great, Mindy. We're excited. We're excited about it. And we're excited to be one of the few lenders that are allowed to actually offer the program as well.
Yeah. So I also want to add that the Florida General Assembly appropriated this money in this year's budget. So they could come back for a special session and appropriate more money later on if needed. And they could also be included in next year's budget. We don't have answers for that, of course, right now, because I don't think anyone knows how quick this money will go. But that definitely is something to keep in mind. If you have people right now that fit into those categories, like you might want to let them know as soon as possible, because that 100 million is going to be spread across the whole state. So, yeah. So, okay. So Chris, can you kind of go over for everyone on here, we're going to give you some high level kind of talking points so that, we of course don't expect you guys to be the policy and the mortgage experts on this, but we do believe that if you guys are equipped with some tools and talking points, that you would be able to better guide your clients until they're handed off to us to kind of take it home. So Chris, can you go over who is eligible for this?
Absolutely. So this is for first-time home buyers. So it's going to be important that the people that are looking to qualify for this, they're first-time home buyers. Typically, when they look at a first-time home buyer, someone who hasn't owned a property, I think it's 3 years. I'll put a notation on this when I post it, but that's typically when you go look for any first-time home buyer programs, they usually look at 3 years out. So, and who qualifies for this is anyone who works in law enforcement. So any police officers, correctional officers, anyone that's working as far as law enforcement is concerned, firefighters, educators, so teachers, right? It's a great one for teachers, healthcare professionals. That's going to be extended out to people in the healthcare industry. I mean, they've had a tough year. And it's great to be able to give back to maybe some that, just didn't know if they had the opportunity to buy. Childcare employees, active military, and also veterans. They must have, there's a few like little things that you have to qualify. So remember, first time home buyers, first thing, right? So if you're taking notes, write that down. The second thing is they have to have a minimum FICO score. So their credit score they have to have a mid score of at least a 640 or higher. Okay, that's very important. And there's different, oh, go ahead.
That, like,
can I explain that?
No, but if your client happens to know what their credit score is.
Yeah, and you as a realtor, you don't have to get into the weeds with it, but you can even say, I think there's a FICO, a requirement. You can even go as far, because I'm telling you the number, say, I think you need a 640 or higher. Now, the nice thing about what we do and many other lenders, I don't want Coffee with Chris to be about Novus or about Chris being writing your loans. So there's a lot of awesome, bankers out there and professionals. So one thing that we do here and a lot of other lenders do is I can work. So if I had someone that had like a 620 score, I could get that score up fairly easy. In most cases, I've seen people get, 80 points to 100 points on their score in a matter of weeks. And we do what's called a rapid rescore. So I look at simulators. I kind of play with some of the credit that they have. I pay things down to a certain amount. And sometimes, to just push that score over the limit to where we need to go from here to here, I don't have to do a lot. So that's one thing. So if someone told you, I got horrible credit, doesn't mean they shouldn't try and apply. We can look and see if we can work with them. But that's a big point, is that we want to make sure that their ability to repay their loan is there. And then also there's loan limits from county to county. So, in Florida, we know we have, I don't know, probably like 100 counties, it seems like, in a state. So I'm going to be specific. You can look up the guidelines on FHA loans and your conventional loans in wherever you're at and whatever state you're at, it doesn't matter what other state you're at, but in Florida, wherever you are in Florida, look at your county limits. So for example, income limits for Manatee and Sarasota County, the income requirements, you can't make a household income of more than 129,450. This program is really designed with the rapid rate of inflation. A lot of these state employees, they're not getting raises as fast as the cost of goods and everything else is going up. So they're really trying to push for these people out there, that hardworking people that, with the prices of everything, they don't have that opportunity. And it's hard for them to save the substantial amount of money that they would need, not only for the down payment, but also closing costs. So, right, I think this is the second or third thing you'd write down, right? You're going to write down the income limit is around 130,000, you could say, or you say under 130. They always have an oddball number. So this number is 129,450. How they get there, how they get their algorithms, that's the mystery. So income requirement. The third or fourth thing here is loan limits. So there's a loan limit, and you're going to still do an FHA loan, or if you qualify for a conventional loan. This is a grant. I want to make sure everybody knows. So the state is offering a grant for down payment assistance and also closing costs. So it's not necessarily, they're writing the note as Florida, the Florida housing has their own programs that they lend money on, but this is not that. This is a grant for down payment assistance as well as closing costs. So you would adhere to the regular FHA loan limits if it's FHA. So here in our county, here's another crazy number, guys. You might want to write it down, because the one good thing, guys, is you'll look super smart, right? When you're talking to your clients, you'll stand out. I know it sounds silly, but these little tiny things actually make a big impression on your clients. So when you say, if you do go FHA, guys, we can't exceed a loan of $420,680. I'm going to say that one again. $420,680. Again, crazy number, but that's what it is. I even forget. I have to look it up sometimes. I'm like, is it 420? This because they've changed this so much in the past 2 years. This has gone up, I think, 3 or 4 times. I don't have the exact number in the last 2 years. So they keep adjusting it higher because of the rate of appreciation in homes. So that's going to be your FHA.
You know, is there are some limits, like you can't get a huge jumbo loan with this.
Correct.
But yeah.
Correct. So you're going to adhere to the FHA USDA at the 426.80, and then on your regular loan limits for conventional, right now they just went up at the beginning of the year to 647,200. So as long as they're doing a conventional loan at 647,200 and they make under what $129,450, they could qualify for this loan. And the great thing about it is this is I want to pass it off to Mindy. I don't want to keep rolling unless Mindy wants to add something. But the next thing is we'll talk about is what does the program provide?
Yeah. So, if you can explain to us, because Chris actually just yesterday explained this to me, so I think other people will appreciate hearing this. So, in terms of what does it provide, like how much does it provide, and then what is it like? If it's not an actual the mortgage itself, like what is it that it's given? Are we getting free cash?
Well, as we know, right, the old adage goes, nothing's for nothing, right? Nothing's for free. However, in this case, it is free for a while. We'll put it this way, and we'll get to what I mean by that. So what does the program provide? Essentially, they'll give you up to 5% because a conventional loan requires 5% down, right, of the mortgage loan, and the max amount is $25,000. All right. So the terms of that is that they're going to give it to you at 0%. You're not going to necessarily have to. There's not a loan. You're not going to pay it back, but it's a non-amortizing 30-year deferred second mortgage. And I know, what does that mean? What does a 30-year non-amortized 30-year deferred second mortgage mean? What it means, in simple terms, right, is that it's going to go on the back end of your loan. You're going to have a lien on your property for, if it's 20,000 that you need, 20,000 will be on the lien, and it won't be paid for until you sell your home. And in some cases, I don't know, I didn't read anything if there's a case where you refinance. I don't think it needs to be paid at that time. I think it's on per sale. But once the house sells, they'll take back whatever that money is out of the sales price. However, does it really matter, guys? If you do not have the money to come to the table, or you might have a little bit of money, and with the rate of inflation, with where you're getting paid, these wonderful people are getting paid, they want to keep that a little bit of money just as a safety net. Things in their life might change in 5, 10, or 15 years, whatever it is that they sell that home. So they might not have that cash accessible today. And we know, if you look at historical appreciation rates, that house that they're buying today, they're going to have much more equity in 5, 10, 20 years, even at a normal 3 to 5% rate a year. So at the end of the day, it allows them to get into the home, still, believe it or not, at super low interest rates. I mean, if you look at the chart from the 70s to now on mortgage rates, we're still at the bottom end of it. So it gives them the opportunity not to pay these rental rates, because we all know right now the rents that keep gouging the renters. So if they're renting, and every other 6 months or 12, every time they're renewing that lease, they're tagging on more money. So they would have a sense of security as far as their payment is concerned on their fixed mortgage. So again, it's money that they're not necessarily getting for free. They're just getting today. They're getting today to get them into the next step. So that's really awesome. And it doesn't increase their monthly payment. It has nothing to do with anything, right? It's just extends out to the end back of the loan. I hope you guys understand that. And if you don't, you can call me and I can go a little bit more in depth, but try and keep it very linear and simple for you.
This is a good time to say, if you have questions, please put them in the chat, because we just got a few more minutes left, but go ahead and add those here. But, one advantage that I think we have right now is because home values are increasing so much. If someone locks in, gets in a house, and then, so let's say they borrow or not borrow, but they use the program and get, say, $20,000, right? Added onto the end of their loan. And then in 5, 10 years, they go to sell. I mean, your home value has increased so much. I think in a lot of cases, people don't feel that. They don't feel the pain of, it just comes out of the like super amount of equity that they got. So yeah, it's a great program. And someone had asked me why they think that they're targeting this towards, what they're calling the hometown heroes. And because everyone, or at least most everyone in that category, are some form of government worker. And as many of us know, government budgets, in terms of giving people raises and such, is always slow in terms of keeping up with inflation. So the price of everything, I know, Chris, you mentioned this, but I just want to elaborate a little bit more. The price of everything else has gone up, but most government workers' budgets and salaries haven't yet gone up. And so this is almost like a stopgap in between, so that these people don't feel like they're being left behind in the housing market. I mean, if we have, say, police officers are a perfect one, or firefighters, we don't want them leaving our state or leaving our area because they can't afford to buy a house. Like, we need those workers. We need them here for us. So I just think it's so important that everyone uh, knows this, so that they can educate their clients or potential clients who might qualify for this. One last question, Chris: can every lender give deal in this program?
No, no. You have to be signed up with, Florida Housing. There's a lot of good a lot of good banks that are, so you can literally go on their site and see who the lenders are that are qualified to, work with Florida Housing and write these loans. Fortunately, Novus is one of those banks. But the other piece of it too is, so just let me give you practical numbers before we close out. So you have someone buying a $400,000 house with a conventional rate, right? That would be 5% down, which is 20,000, and leave them about 5,000 for their closing costs. That's pretty amazing. And then same thing, if you're looking at, even if you're pretty close to on a max FHA loan at the 420, right? You're looking at 3.5% down. So that front end would be more like 15,000-ish. I don't have my calculator right in front of me, but say 15,000-ish, and literally would almost cover at the 25,000 max, would almost cover the closing costs, all of it should. And that would be like literally zero out of pocket. So if you know teachers, get on the phone with them. If you know, people who work in law enforcement, get on the phone with them and say, if you had a pre-approval out and they just weren't getting there, prices were going up, and the more money they had to put down, they just didn't have. If I was in your field, and I'm on my side, I'm calling all these people that I know. As you know, we give a lot of referrals out to our referral partners. And I'm going out there to call them and say, listen, now's the time to at least try to look at it again. And with a certified credit approval, you're basically going to compete with those cash buyers, right? Most banks do them now. Again, I don't want this to be about me or us. I really want this platform to be about educating, but a lot of banks do what they call the certified credit approval. We are one of them. So the client is fully underwritten, right? So at that time, they're fully underwritten. It's just subject to an appraisal. It's a conditional commitment subject to an appraisal and a clean title. And now you basically have sourced the down payment. You know that they're coming, if it's conventional, with 5% down in the closing costs, whatever's extra we source from them. But now you can not only compete with that. If I was a real estate agent, I'd be saying this is a teacher. They're fully approved, subject to a clean title, clean appraisal. They really their rents are going up. I mean, I could see you realtors out there crushing this with this program here in at least this state of Florida. Anyway, so I don't want to take up your time. It's 10:19. We promised you 15, 20 minutes.
Though, real quick.
Okay.
Okay. So one question was, can you repeat at house conventional at 400,000, how much out of pocket? Sandy, I can allow you
to 400,000. So at 400,000, right? 5% down if it's a conventional loan. That's 20,000. This program, the grant will give up to 25 grand. That would apply 5,000 to the closing costs on a $400,000 loan with your escrow and all that. Let's just be safe and say 13,000. They would need about 8 grand out of their pocket, somewhere, give or take. Could be less. So I like to always inflate the numbers a little bit, but if you're putting 20,000 down for your 5%, 5% towards closing costs and escrow, there might be another $5,000 to $8,000 they need to come up with. They can get a gift from a family member. There's multiple different ways that they can get that money outside of having to go to their own bank account. So it's outstanding. And if you have questions, get with Mindy. She'll shoot you your contact information, and we love to answer any questions. And I don't want another shameless plug for the company here. We're going to be doing an event for all you realtors that are interested. I'm going to end with this on June 10th. Save this date, because our bank is paying for $300 a ticket for Renee Rodriguez. We're doing a live stream at RASM, or you could do it from your comfort of your home from 12 to 2 if you're on the eastern side. But we want you to come join us. I'm buying lunch. I'm going to have lunch served from 11 to 2. You get there, go mingle with the rest of your colleagues that work in the industry. It'll be a lot of energy, great event. So if you have questions on that, I'd love to I got limited tickets, but I still have some. If you're interested in that event, message us so I can get one in your hand and get you registered. All right.
All right. Thanks, everyone. This is going to be recorded, and I'll put it up on Facebook and YouTube later on. If you have any friends that you want to send this to, you're welcome to do so. But I hope everyone has a great rest of your Thursday and have a wonderful Memorial Day weekend.
Yes. Thank you. Bye now.